Hi, I'm Bharath and I manage the Sundaram Midcap Fund. So Sundaram Midcap Fund is amongst the earliest funds in this category with a 2-decade experience in this space. From a contribution, it's largely to do with sectoral picks, especially in case of auto ancillaries, healthcare services, industrials, as well as retailing. When we talk of Sundaram Midcap, it clearly resonates with bottom-up selection as a core philosophy, which means we distinctly move towards selection while keeping sector bets moderate. Second, passionate promoters. Are the promoters hungry enough to grow the business over the next 3-5 years to a different scale? And 3, distinct competitive advantages. Are they proven, and has it helped the business in that process of establishing itself as a clear market leader? The advantage of having this approach is that it clearly helps you to ride the upside when a sector grows from being a nascent industry to a large industry over a period of say 5-7 years. The current approach is all about keeping the portfolio as diversified with an eye on bottom-up selection. Currently, we are overweight industrials, which is capital goods, along with it auto ancillaries, which has been a core to the fund for a large part of the last 10 years. We believe India is in a manufacturing cusp today, and a lot of the industrial companies which had probably a decade lost in the previous 10 years are seeing a renaissance at this point of time. We believe the private sector capex will have its journey started in a much more aggressive manner, which again will boil down to opportunities for the industrial companies. So net manufacturing is a core thesis which the fund is anchored around. We have stock specific bets within healthcare as well as financial services, which is more about the penetration of these products and services to a larger audience as the income levels move up. Midcaps are interestingly poised in the current scenario for 2 reasons. One, we have a macro which is challenging and a micro which is fascinating. We have a corporate balance sheet which is at its best ever. We have a policy framework which is putting far more guardrails in terms of accidents, and which makes sure that at a systemic level we are far more healthy. And we've seen an influx of capital in terms of long-term capital over the last 5 years, again meaningfully, and which means as a bottom-up stock selector, it's all the more interesting to go and dig for new ideas and build confidence. Valuation at a headline level might not be as cheap as it used to be a decade back, when we never used to justify valuations so heavily as we're doing it today. What we look at from a volatility is from 2 dimensions. One is in terms of the selection of stocks, and second is in terms of process. When it comes to selection of stocks, there are a few parameters which are keenly evaluated to make sure that by design we don't choose a inherently volatile business model. Cap fund, we've been quite low on EPC companies for a large period of time, given that it's highly competitive and entry barriers aren't as stringent as some of the other sectors. We look at building enough guardrails in terms of taming volatility. So the process part takes care of our exposure. The selection part takes care of how much we inherently expose ourselves to businesses which rank up on quality and filter out businesses which rank low on quality. If you were to unwind and see the last 5 years, every point of crisis actually opened up a lot of opportunities, especially in the mid and small cap space. This is a phase where the discovery element is getting even more well noticed. When a stock or a business starts scaling up, markets punish or reward pace of change far more disproportionately in today's world than probably a decade earlier. So to that extent, a little bit of more diligence, having a little bit more nimble approach to find what is happening in that space with a little bit more on-ground research is what supports one investment hypothesis much better. I think staying away from noise and focusing on the fundamentals does matter, especially at times when the market's overheated. What we call as choosing numbers over narratives is what I'm alluding to. Second, I would say, is the ability to ride winners long and cut losers dispassionately when it comes to mid-cap investing. And lastly, remembering one's mistake itself is crucial to avoid a mistake again. So Sundaram Midcap Fund is, in a sense, a curated portfolio of growth businesses, which is a proxy to India's story. What we endeavor here is to provide a risk-adjusted return experience which has tested cycles over the last 2 decades, and in this process also participates in some of the emerging segments of Indian economy. So pick tomorrow's market leaders today. Invest with Sundaram Midcap Fund. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.